I just wanted to highlight the note in the pack today on the platforms Netwealth and Hub, more specifically around Hub, as we have added that stock into the retail list, into the sector preferred list, and the best ideas list the strategy team publishes. Within my list of market exposed stocks, we've taken Magellan out of that list and we've added Hub in replacement. Clearly not a direct swap, different risk profile, different market caps here. But similar to the premise when Magellan went into that list, we see Hub here. Clearly there could be some volatility ahead of us in markets. These are market exposed beta stocks, but we're pretty comfortable here with the valuation of Hub after a small pullback in recent times. And if we do see market volatility, we think this is a name that should be in front of clients because they can be quite volatile if markets are wobbly going forward. Just touch on a couple of the short-term and long-term aspects to the investment case. On a short-term perspective, both platforms will put out their funds under administration, FUA is the acronym, update in July. One of the main things the markets focus on is obviously the net inflow levels. Clearly the market volatility, the COVID impacts and disruption will have had an impact on inflows, but I'm fully expecting these two groups to report still strong inflows in this quarter. Expecting Hub to report similar levels to where they were in the PCP, slightly ahead. And I think that'll give the confidence, if that does come through, that these stocks are still going to grow into FY21 by virtue of the flows. And just secondly, when Consensus recut their numbers, was really more in the depths of when COVID was hitting in the April update. You'll see in our note that we've upgraded our forecast going forward, and we expect Consensus probably follows as we see these updates come through in the next month. Just a quick recap on a couple of the longer term thematics for those that haven't really followed the story that closely. Growth in funds under administration, as I mentioned, it's a key aspect to the growth. Hub has been growing on an annualised basis of 35% growth from their inflows. So inflows alone adding 35% to the base in which they derive revenue, and that's ignoring obviously any market movements to come through. Clearly expect that to drop away, that growth rate, as the businesses or as this business matures. However, if you want to take a longer term view, 2, 3, 5 years, obviously you have the underlying assets, the market growth to add to that as well. I've talked a number of times on these platforms around the pricing pressure and the competitive pressure. That is still flowing through, and it's still flowing through the numbers, but our checks and talking to the companies in the industry, really over the last 12 months, that pricing pressure has been contained. So we think that rate of degradation in their revenue margins will start to ease in coming reporting periods. And just on scale, this is probably the differentiator to Hub and Netwealth. Netwealth is a more mature business. It's probably safer in inverted commas in some aspects. But if we look at the scale to come through in Hub, Netwealth currently operating on around 50% EBITDA margins as a more mature business. Hub has some risks that they don't get there, but if we normalise for a couple of accounting irregularities between the two groups, Hub's on around a 27% margin, and we have that lifting probably over the next 5 years to get into the early 40s. So we think that scale can come through and drive the growth. And just lastly, net cash balance sheet gives a lot of comfort around on the balance sheet and any corporate initiatives if they were to arise over coming years. We've got around 20% upside to our price target. As I said, we've taken the opportunity with the share price pulling back around sort of 10 to 20% over the last month or so to add it into the sector picks.